So let's talk about the third big strategy here that could lead to a windfall of tax savings in retirement.
Well, Kelly, smart retirees know something the average person doesn't know. When you pay your taxes could significantly lower your taxes in the long run. For example, if you wait too long to pay taxes until you're taking Social Security and paying your required minimum distributions, you lose one very important thing, and that's control. And when you give up control, you could end up paying far more taxes than you need to. This is called tax bracket management, and it could be one of the most valuable tax strategies you've never heard about. And this has been highlighted as an effective tax strategy by some of the most credible financial sources, including the Wall Street Journal, Barron's, and Forbes. So this can be a very effective strategy to save a lot of money in taxes when you retire.
So how does it work?
Well, think of it like this. Every year, the government gives you a tax bucket. And as long as your income fits into that bucket, you pay a smaller amount of taxes. But here's the catch. If you don't fill that bucket to the top in your first few years of retirement, it's a missed opportunity for huge tax savings. Because in later years, when you add up your income from IRA and 401k withdrawals, your Social Security benefit, plus any other income from dividends, interest, or real estate, that income bucket could then overflow. And when it overflows, it triggers higher taxes. The key is to fill your bucket up every year on purpose, just below the top. And if you're recently retired or planning to retire soon, you haven't started taking required minimum distributions, you're in the perfect position. You're in the sweet spot to make this smart move right now. Because this one smart move could save you a lot of money in retirement.
Interesting, and I bet a lot of people don't know how to do that.
No, and this one is actually very simple if it's done very strategically, because you probably have a few years where your income is lower than it used to be. We call these your cheap tax years. And if you kick the can on taxes during these cheap tax years, then you could pay a lot more taxes down the road. And by that time, there's nothing you can do to stop it. This isn't about paying more taxes now. This is about paying smarter taxes now, so you don't get clobbered by taxes later. Does that kind of make sense there?
Absolutely. And I mean, I guess my mind goes to what happens if we do nothing?
Oh, so if we do nothing, your IRA and 401k would continue to grow. And when you turn 73, the IRS will come knocking and force you to start withdrawing money from these accounts, whether you need the money or not. These are your required minimum distributions, right? And these RMDs force you to withdraw a certain amount of money, and that amount increases every single year. So you'll pay more and more taxes every year too. And don't forget, these withdrawals get added to your income from Social Security and any other income source like dividends, interest, real estate, or anything else. And when you add up all of these things suddenly, you could be forced into a higher tax bracket. You could pay taxes on Social Security up to 85% of it. Your Medicare premiums could even double or triple. And you have zero control at this point. And guess what? This will continue to happen every year for the rest of your life. But it does get a little worse when one spouse passes away. The surviving spouse now has to file their taxes as a single person, which is a higher tax bracket. So they could be getting the same amount of income, but now they're paying even higher taxes. This is called the widow's penalty.
Sounds like a horrible situation, and I also wonder if this is news to people when this happens.
Scarily enough, Kelly, you're right. Most people don't know about these things. Nobody teaches you this kind of stuff. And your employer probably didn't explain it when you signed up for that tax-deferred 401k. But if you have just one takeaway from our conversation today, it's this. You can control how and when you pay taxes in retirement. And if you do this right, it could save you a significant amount of money. Depending on how much money you've saved, it could be 6 figures in tax savings. But only if you act before you take Social Security or RMDs kick in.
So, Matt, what do you think? What are some little strategies that we can use to take advantage of these lower tax years?
Yeah, let's talk about that. Well, the first one would be to use this window to convert your traditional IRA or 401k into a Roth. We talked about this in the first segment. I can't emphasize the power of this strategy enough. You'll pay the taxes on the money you convert now, but the tax rates are at 40-year lows. So it's like paying taxes when they're on sale. But then all of the money that goes into that Roth, it grows tax-free. And then any money that you withdraw in retirement is also tax-free. A second one is realizing capital gains. If you have investments with unrealized gains, it could be smart to sell off some of those winners while you're in lower tax bracket rates. A third is selling any of your concentrated stock positions. If you have a big position in one or even a few stocks, now is your chance to sell it strategically over time while your tax bracket, again, is low. Otherwise, it could become a tax time bomb for later. And fourth, one is withdrawing money from your traditional IRA or 401k early. This one always surprises people, but sometimes the best move is to start pulling from your traditional retirement accounts before RMDs kick in. This could smooth out your income over time and avoid a future spike when RMDs kick in.
Absolutely. I mean, these are all great ideas.
Yeah, and Kelly, this isn't about being tricky or clever or even about beating the system. This is about being tax smart. You've worked hard and made sacrifices doing the hard part called saving for retirement. And even if you make a small effort here, your retirement savings could last a lot longer. But you only have a short window to do this because once you file for Social Security and start taking RMDs, a lot of these options are no longer available.
So what are the next steps if we want to take advantage of the tax saving strategies?
So Kelly, here's the problem. Most people spend their lives saving money in IRAs and 401ks without thinking about the taxes this will generate during their retirement. But if you do some simple retirement tax planning now, you could see massive tax savings. That's where compounding tax savings comes in. This is not a product or a tax loophole. It's just smart tax planning. The idea is simple. If you could save $10,000 in taxes in 1 year and repeat those same taxes saving every year for the next 25 years, that's $250,000 in lifetime savings. And because your savings stay invested, they could quietly snowball into $300,000, $400,000, or even $500,000. The best part, you don't need to have millions of dollars to do this. Anyone with more than $200,000 could realize significant tax savings. We'll help you uncover opportunities that could save you tens of thousands every year in retirement. It's called our retirement tax savings analysis. We make this really simple. Once we get some basic information from you, we identify the tax saving strategies that are best suited for your specific situation. And then we'll show you how much money you've been projected to save throughout your retirement. These strategies often yield meaningful savings that could significantly improve your lifestyle during your retirement.
Oh, I certainly appreciate all the strategies you offered today, and looking forward to seeing what happens here. Matt, thank you so much for the opportunity.
Yeah, thank you, Kelly.
So if you want to discover how much money you could save in taxes when you retire, start with this retirement tax savings analysis. As Matt mentioned, this is not some off-the-shelf report. It's really customized to your specific situation, and it's absolutely free. So if you've saved more than $200,000 for retirement, schedule your free analysis now by calling 864-507-4222. Let's discover how much money in taxes you could really save. Call 864-507-4222. Well, that's all the time we have for today. We want to thank you for watching Retire Ready Today with Matt Dixon from TruNorth Advisors. We look forward to seeing you soon. And remember, it's not what you make, it's what you keep.